in? Mr. Herb Greenberg, partner at Pacific Square Research, CNBC contributor, longtime friend, a guy I miss every day, and also a guy who's been writing about short sellers since John Madden's Raiders were playing in the Super Bowl. Herb, it's great to have you back on. You know, listen, I mean that as a compliment, my friend, because you and I have been through a lot of battles, Rocker Partners, Taser, remember all that stuff, Overstock.com, the Sith Lords. Talk to us about the role that short sellers often play. They are not, sometimes they're bad, but they're not always these anti-American, anti-patriots trying to ruin corporate America, are they?
Look, every time I hear that, obviously I want to shake my head. That's probably the most absurd comment I've heard. And my response to that is always the same. If you don't want the scrutiny, don't go public. And once you're public, you're a quasi-public organization, and you're opening yourself up to scrutiny. After all, these companies file SEC documents. They have filings with the SEC, and those filings have all sorts of information. And as I always like to say, you have two very smart people, and they both can come down very differently on how they see the company. And some people don't think the company is all it's cracked up to be, and they take a position against that. That's called short selling. But what they are, Brian, is they're also detectives in the marketplace. And that's not some like hoo-ha. They're out there basically trying to get you ahead of the curve that there may be a problem that may or will have a problem with the stock. And we have so many examples of that. Not that they're always right. Nobody's always right. No long is always right. No short is always right. Things happen. But the reality is you need people policing. They are among the ones policing.
Yeah, I mean, listen, a lot of these companies, and by the way, they come on the air, we like their CEOs. A lot of these companies, Leslie, they've got huge PR departments, right? I mean, they can tell their story, and sometimes it's one or two people that are poking around the balance sheet for a year that are able to uncover something that is malfeasance or just plain out fraud, and the market thanks them later, but at the time, they get attacked. I'm not saying I'm sorry for short sellers at all, but man, some of them just get punched in the gut constantly.
Yeah, you have to have a strong stomach to do this, especially the type of work that the Hindenburgs of the world are doing and the Muddy Waters of the world are doing. And notably, last week we saw Citron actually decide no longer to publish short reports after 20 years of doing so, having been on the opposite side of that GameStop trade, which marked a pretty notable sea change in the small industry that is short sellers these days. And it's worth noting, it is a small industry, smaller than it's been in recent years. Short interest is a proportion of just the overall market is at a 17-year low. There aren't that many people actually even short selling right now, whether it's for hedging purposes or directional bet. And so it's just kind of remarkable seeing these, changes in response to what we saw last week with GameStop.
Yeah, and, I guess, Herb, listen, we've learned. Go ahead, buddy.
Well, I was just going to say something. When Leslie mentioned the low short interest, the one thing I would point out that people seem to forget in all of this is that the short sellers also provide, they help keep an efficient capital markets, and they provide that sort of natural buying when a stock starts to fall, because they're going to be there buying. If they're not there, it's a vacuum. It's walking into an elevator shaft while looking at your phone and not really realizing the elevator isn't there. You go straight down. And that, I think, is one of the concepts that sort of gets lost in the noise of all this.
Okay, Herb, but let me flip it a bit. Okay, the reason that the Reddit army went after GameStop, was because it had 130% shorted effectively through. And people say, how's that possible? I don't want to go into it. There's synthetic stuff and options, whatever it might be. The SEC is supposed to prevent naked short selling. This was not exactly that, but Herb, do you think there should be limits on not banning short selling, but maybe firm caps on the amount of any kind of product that can be percentage short against the float?
My response to that is go read Reg SHO, which I think was 2005 by the SEC. Go down to, I think it was section D or somewhere. There is a huge section in that Reg SHO, which was designed to prevent short selling, that explains how there can be the appearance of naked short selling when there is none. This was a populist idea to sort of glom onto by people who had no idea what they were talking about. And the reality, I don't know what the real short interest in GameStop was, and I don't really care. But when I see people pulling that number out over and over again without knowing what they're talking about, That's disturbing because they don't understand how the markets work. And I think that there's been very little discussion about that in the mainstream media.
Well, regulation SHO, Herb, while important, not exactly light reading. And maybe that's why we're not exactly getting a lot of conversation. No, it's not.
Right.
Herb, it's great to see you, buddy.
Not.
Miss you every day.
Shepard Smith here. Thanks for watching CNBC on YouTube.